Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 29th day of January, 2015, and this is the daily report for gold and silver. What a difference a day makes. We have got a dramatic sell-off across the board in the precious metals markets, stronger dollar, lower crude oil, and equities markets appearing to rebound back to the upside. First, to gold. Currently off about $26, $27 or about 2% on the day, $12.57 and change. That is the screen print that we're looking at. That is off of a low of $12.51.90 and a high of $12.83.30. But the real action has been in silver, trading off over $1 on the day, below 18, below 17 at 16.91. As I said, off about $1 or almost 6% lower, 5.85% lower. 1672, that was the low. 1788, that was the high. Of course, we are out of silver, out of gold. We'll talk about our strategy, our lack of positions, which is a good thing. We did exit all of our trades, both gold and silver, over the last few days. And really the strategy that we'll be looking at to go into beginning of next week, all on today's daily report. Absolutely no doubt we have had a tremendous backslide in terms of gold prices over this last trading day. As I said, currently trading off about $25, $26. You can see that on this daily chart here. I want to try to make sense of this current price. We can find some areas where it does match up in terms of a fib retracement, and we'll talk about that in a second. I need to pull up a half-a-day chart for us to see that. Key areas that we want to look at right now is this existing top right here. I'm going to carry it across as straight as I can. And what we'll see is that it absolutely matches these lows that we got this morning when the market traded and really broke down to approximately, I'll call it a 1250, right in that area. Now, of course, all of our subscribers are currently flat in the market, gold and silver. I received quite a few emails yesterday from subscribers that were still long their gold. In most cases, I had them either keep it or move it maybe to 77. Regardless, we all got in roughly 12, 17 and a half. We are all out well above where the market is. And to me, that is the advantage of using a trailing stop. I cannot tell you when this market will begin to backslide. What I can do is position ourselves so that we either maintain a maximum amount of profits or a minimal drawdown. In either case, both are very, very important. Now, when we look at the 720-minute chart, we can see one thing. 1257 is a 50% retracement from the move up here, which is 1386, down to the lows at 1130. When we do that, we get a pretty interesting point right in here, 1257. That is precisely where the market seems to be bottoming out. Most importantly, when we look at it in this way, take a look at once this market, and this to me is the key, once this market broke above this long-standing resistance line, we had in essence a linear move up, a parabolic rise in the market. Now, the parabolic rise wasn't that great in terms of price point. And if you recall, our original estimates or numbers that we were looking at for this market to go to was anywhere between 1300 and 1312. That's going to be right around the middle, right in here, just above this. And we know now that the intraday high came in at around 1308. So I think that it absolutely hit the numbers we were looking for it to go to. Now that the market is beginning to correct, do I think that any kind of a bull move is over? Well, absolutely not. Markets don't move straight up or straight down typically. And I have been expecting some sort of correction from this most recent move. And that was the rationale behind tightening the stops the way that we did. Now that that's in play, We want to see if any kind of real support comes into the market, because if real support comes into the market in this particular area, let me change the color, right in this particular area, we might have a decent buy opportunity here. However, I want to be cautious about entering this market because we've gotten zero technical confirmation that this corrective move is over. And so I really want to, I'd rather get in a little bit late but safe than to try to bottom pick or get in a little bit too early in the market. Now, in terms of where I think the market could go, what I've done is created a very, very simple fib retracement from 1130 in that area. This is saying 1132 up to the top at 1308. We've absolutely broken below a 76% retracement. That's 1266. And the next real level that we want to look at is 1241. 1241 is a type of a retracement that would be logical for the type of move that we got to the upside after we saw the market break. And so therefore, we want to let the dust settle, so to speak. I could be a buyer in here, but if I was a buyer in here, I would be really reserving equity just in case the market did in fact come here to dollar cost average. My recommendation and our official stance right now is we are going to wait. We are going to see how this market reacts over the next couple of days. We have GDP coming out tomorrow, and we'll see what kind of reaction we had. Oil, of course, continues to go lower. Dollar continues to track higher. Of course, the big move today was silver, down 6% on the day, over $1. Tremendous drop. When we take a look at this market, let me go ahead and compress this chart. And I needed to add a few data points to do that properly. But we talked about the fact that when we look at this long-standing former support area, which is right here, there's a lot of technical history behind this price point. We talked about this over the last couple of days, that this would be a really, really strong market to be able to overcome this particular technical resistance area. It obviously has not. Now, we had this aberration or this low at 14. We talked about that. $4 move up. So where could this market go to? Well, my feeling or my sentiment is right now, really strong support in silver really doesn't come in till about $16. It's going to, I believe, run in tandem with gold. If we've seen the bottom of gold, in other words, if that was a one-day dip and that begins to recoup, we would see this market move back up. But for right now, my recommendation is to sit on the sidelines with no open positions in either gold or silver. Let the dust settle, see how it reacts, and then go from there. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.